Dirty ways to make money. In the relentless pursuit of wealth, some individuals resort to morally questionable methods, exploiting loopholes and vulnerabilities for personal gain. This narrative explores several such unethical practices that, while often legal, raise significant ethical concerns. 1. Exploiting legal loopholes. Some individuals and corporations capitalize on ambiguities in laws to maximize profits. In 2021, Amazon paid just 6% in federal taxes on over $35 billion in profit, using deductions and incentives. While technically legal, critics argue these practices deprive governments of essential revenue and strain public services. 2. Insider trading. Trading stocks based on non-public material information undermines market integrity. Raj Rajaratnam, a hedge fund manager, was convicted in 2011 for earning over $60 million via insider tips. While illegal, enforcement can be difficult, and many cases go unnoticed. 3. Pump and dump schemes. This involves artificially inflating the price of a stock through misleading statements, only to sell off once the price peaks. Jordan Belfort, the real Wolf of Wall Street, made millions using this tactic in the 90s, leaving investors with worthless shares. 4. Ponzi and pyramid schemes. These schemes promise high returns with little risk. Bernie Madoff's infamous Ponzi scheme defrauded investors of $65 billion before collapsing in 2008. New investments paid old investors until the system fell apart, destroying retirement accounts and charities. 5. Affiliate marketing scams. Some online marketers push low-quality or fake products for commission, often through fake reviews or clickbait. In one case, influencers promoted teeth-whitening pens that turned out to be repackaged glue sticks from Alibaba. 6. Price gouging. During emergencies, some sellers drastically inflate prices of essentials. In the early days of the COVID-19 pandemic, resellers were charging over $100 for bottles of hand sanitizer on Amazon, triggering public outrage and platform bans. 7. Payday lending. Short-term, high-interest loans can trap borrowers in debt cycles. Some payday lenders charge annual percentage rates, APRs, as high as 400%. Many borrowers take out new loans to repay the old, creating a spiral of dependency. 8. Counterfeit goods. Fake products can include luxury items, cosmetics, electronics, and even baby formula. In 2016, U.S. authorities seized $1.38 billion in counterfeit goods. Not only do these fakes cheat buyers, but some pose serious health and safety risks. 9. Money laundering. This process hides the origin of criminal proceeds, making dirty money appear clean. In 2012, HSBC was fined $1.9 billion for laundering drug cartel money through its accounts. Weak oversight made it easy to move millions undetected. 10. Cybercrime and identity theft. Data breaches and phishing scams affect millions. In 2017, the Equifax breach exposed the personal data of over 147 million Americans, enabling fraudsters to open fake credit lines and file false tax returns. 11. Selling hazardous products. Some businesses knowingly market harmful products. Tobacco companies for decades denied the health risks of smoking, even manipulating research. More recently, companies have been sued over baby powders linked to cancer. 12. Romance scams. Online scammers create fake identities to exploit lonely individuals. The FBI reported over $1 billion lost in romance scams in 2022. Victims are often manipulated over months, believing they are helping a loved one in need. 13. Advance fee scams. Victims are promised lottery winnings or inheritances in exchange for upfront fees. The Nigerian prince scam is notorious, yet still effective. In 2021 alone, Americans lost over $100 million to such scams. 14. Black money scams. Fraudsters show stained or blackened currency they claim can be cleaned using special chemicals, available for a price. Victims pay thousands for cleaning kits, only to realize the cash was fake or never existed. 15. Body brokering. In the rehab industry, unethical brokers direct patients to specific treatment centers for kickbacks. In some cases, patients were given drugs to ensure relapse, keeping them in a profitable cycle. These tactics are under federal investigation in several U.S. states. 16. Fake online stores. Fraudulent websites mimic real e-commerce stores, collect payments, and never deliver goods. In 2020, a spike in fake sites selling PPE led to thousands of complaints to the Better Business Bureau. 17. Clickbait and misinformation. Websites earn ad revenue by publishing shocking or false headlines. In 2016, one Macedonian town made global headlines after teens earned thousands publishing fake political news to exploit Facebook's algorithm. 18. Selling personal data. Many tech companies track users and sell data to advertisers, sometimes without clear consent. In 2019, it was revealed that several popular mobile apps sold location data to third parties, prompting lawsuits and policy changes. 19. Exploitative labor practices. Workers in fast fashion and gig economies often face low wages, long hours, and poor conditions. In 2020, Boohoo faced scrutiny after reports surfaced of UK workers earning below minimum wage in unsafe factories. 20. Environmental negligence. Corporations sometimes cut corners on waste management to save costs. In 2010, BP's Deepwater Horizon oil rig exploded due to ignored safety warnings, causing the worst marine oil spill in history, costing $65 billion in damages. Conclusion. While these methods can yield financial gain, they often do so at significant ethical and societal costs. From rigged markets to stolen identities, the common thread is exploitation for profit at the expense of others. Public scrutiny, regulatory oversight, and informed consumers are essential tools in pushing back against these predatory practices. As technology and finance evolve, so too must our vigilance. Dirty money leaves a trail, and it's up to all of us to follow it. Disclaimer. This video is for educational and entertainment purposes only. All information is based on publicly available sources. We do not provide legal or financial advice, and are not liable for any actions taken based on this content.